lottery. How many of you heard about this ovarian lottery? He says that he is so successful because he is born at the right time, at the right place. He is born in 1930 in United States of America. So what is the importance of 1930 in the history? The Great Depression, right? So by the time he turned teenage, America has come out of its recession and he has seen only the growth. So he is born at the right time, at the right place. And look at this slide. This is net worth at the different age, right? So you can see that. So by the way, how many of you heard that rich people live longer? Have you heard that? It's not that rich people live longer. Only people who live longer can create wealth like this because compounding takes time. See, in his case, had he retired from his investment life at the age of 60, we wouldn't have heard about Warren Buffett because 95% of his wealth has been created after he turned 60. So the reason for his success is he's born at the right time, he's born at the right place, he is given time, which is very important, right? But wait a minute, is he the only person who was born in 1930 in United States of America and he's lived so long? He's not, right? There may be thousands more. But why there is only one Warren Buffett? So there is something missing, right? And that is the most important thing. He has taken the action. So ladies and gentlemen, we are at the right time, at the right place. Hopefully we'll have longer time also. But we have to take an action. Then we can also be wealthy like this. Why I'm telling you this? See, we are witnessing one of the most important transformation in the history of this country. We are the 5th largest economy in the world right now, right? With $3.5 trillion. We are going to grow much, much, much bigger. What is the reason? It's because of you and me. So we all know India is the largest human resource in the planet. Yes? We have just overtook China sometimes back. This is the only reason why we are going to grow as a country, grow as an economy. So being said that, so do China, right? China is also as populous as we are. They are also around 1.4 billion in population. But why India? Think for a second. How many of you think that China can overtake US? Can they? You think China can overtake US? But according to a recent study which is conducted by Economic Times, they say that China cannot overtake US because by the time they become richer, they will become older. So think about this. For every 4 grandparents in China, there is only one grandson or grandchild. So the ratio is 4:1. Because of their one-child policy, which has been taken so years back. Now come back to India. India is one of the youngest countries in the world. Our average age is towards the late 20s, and we are going to stay this for the next 50 years. Our 2/3 of our population is less than 35. What is the importance of this? Why this can make India a big economy? If you look at the life history of a person or life stage of a person, till the age he turns 15, he consumes lesser, and contribute lesser to the economy, right? By the time he turns 60 or 70, then also, after that also, he consumes lesser and contribute lesser to the economy. The bulk of the contribution to the economy and the consumption happens between the age group of say 15 to 60, 65, 70, whatever it is. So India is in that stage right now. We are going to be one of the youngest countries for the next 50 years, and this consumption alone can take us to places. To explain more about this, we have with us today Mr. Gaurav Jain, who is the product team from ICICI Prudential Mutual Fund. He is a chartered CFA holder, and he works very close with the fund management team and takes their communication to the public. So please welcome with a great round of applause Gaurav Jain to this.
Thank you so much. Better? Thank you, Mukesh. Good evening, everyone. Welcome, all of you. Am I audible to everybody here? Yeah. So today, I would be walking through about the growth story of India, as well as a bit about markets. So the last 1 year has been a roller coaster ride for the Indian markets. We have had phases of volatility, and this volatility was because of various reasons. One, we saw geopolitical tension hovering between Ukraine and Russia. Two, we saw inflation increasing in various parts of the world. Three, in order to control this inflation, the central banks were increasing their policy rates overall the last year. Now, something very important to note here is that in spite of all the volatility that we have seen, Sensex still managed to cross its all-time high of 63,000 the last year, thanks to the strong retail participation that we have had. Not only that, if you also look at the global performance, India was one among the best performers globally in the last year. Now, when it comes to ICICI, we have a very structured framework that we use to analyze the market. We call this framework as VCTS, where we analyze the market from 4 different angles, where the letter V stands for valuation, the letter C stands for business cycle, the letter T stands for triggers, and the letter S stands for sentiment. So let us look at how is the market looking from each and every of this angle. So if you look at the first dimension of our VCTS framework, if the letter V stands for valuation, you can see that thanks to the recent correction that we have got, the valuations has come down and is trading nearby its historical average. Similarly, if you also look at this chart, now this is an in-house model that we have created. We call it equity valuation index. This indicator basically gives an idea how attractive the equity market are. So if EVA values come down, that implies the equity market are attractive, and if the EVA values goes up, that implies the equity market are expensive. So if we see at this point of time, the equity valuation index is indicating that we are in the neutral mode. That implies that we are neither too skeptical, neither we are too aggressive at this point of time. Maybe if say the market corrects by about 5%, the relative attractiveness of equity market might further increase. But then at this point of time, we are neutral when it comes to the market. Now talking about the second dimension of our VCTS framework, which is the letter C, which stands for business cycle. Now, what has happened in the last couple of years is that because of the various problems that we had COVID crisis, we had demonetization, we had NBFC crisis. So because of the various problems that we had in the last couple of years, one after the other, our corporate growth was not growing to the maximum potential. But then, thanks to the various initiatives being taken by the Indian government today, we have been able to see that the business cycle of India, which kept on declining, has finally bottomed out and is now on an improving trajectory. How are we saying that? There are certain indicators that are indicating that. Let us look at those indicators. So if you look at the first indicator, this is basically the credit growth. It is the rate at which the banks are lending money into the market. If we see the credit growth kept on declining, finally bottomed out and is now on an improving trajectory. Similarly, if you look at this right chart, now this is the chart of corporate profit to GDP. So if I take the top 500 companies and if I take the total corporate profit and if I divide by GDP, I get corporate profit to GDP. So if you see the corporate profit to GDP kept on declining for so many years, it finally bottomed out and is now again on an improving trajectory. So what is that signifying? It is signifying that the corporate profitability of the Indian companies after so many years of pain is now again on a revival trajectory. Similarly, you can see that the GST collections has been going up, which is again a positive signal that is showing the strong tax buoyancy that we are having at this point of time, right? Not only the indicators are improving, the government is also taking a lot of initiative for the revival of economy. So if we see, the government has taken a lot of recent reforms, the PLI scheme, which we call as production linked incentive, the Make in India scheme, the National Asset Monetization scheme. So the government is trying to revive the economy by providing a lot of capital expenditure. Now what has happened because of that? You can see the capital expenditure of Indian economy is increasing, of both public as well as private. Now what will happen when the capital expenditure increases? Companies will expand more, right? What will happen when companies expand more? Any guess? What will happen when the companies expand more? They will recruit more people. What will happen when they recruit more people? The disposable income is going to increasing. What will happen when the disposable income increases? They are going fantastic. They are going to be spending more. So as a result, we can see as the disposable income increases, they are going to be spending more, which is going to be benefiting the demand of the products of the companies, right? Now, if you look at this chart, this is a very interesting chart. There is something very interesting which is happening when it comes to the demographic picture of India. So if I draw a pyramid where the upper part belongs to the upper income group, the middle part belongs to the middle income group, and the lower part belongs to the lower income group, we can see that there is a traction which is happening, that more and more people are moving from lower income strata to the middle income group, and people are moving from middle income group to the upper income group. It is expected that this middle income age bracket is going to be expanding by about 1.6 times in the next 5 years and about 3 times in the next 10 years. Now what will happen as more and more people move from lower income to middle income as well as middle income to upper income strata? The disposable income is again going to be increasing. As the disposable income increases, they are going to be spending more, which is going to be benefiting our economy in the mid to long term basis. Now, if you look at the income per capita of our country, what do I mean by income per capita? If I take the total income and divide by the total population, the income per capita of our country has crossed more than $2,000. Now, any guess what is the significance of this number? Any idea? So the income per capita of our country has crossed more than $2,000. So we have seen whenever this income per capita of $2,000 has been crossed in various other countries, there has been certain benefits. So any guess what is the significance of this number? Any idea? A random guess? So if we see $2,000 is basically the minimum amount that the Indians require for survival in India. Now as income per capita crosses more than $2,000, the incremental income that people are going to be earning is going to be spent toward discretionary items as well as towards investment, right? So as the income per capita keeps on increasing, people are going to be spending more, the disposable income is going to be increasing. On the other hand, if we see, this is a very interesting chart which talks about the kind of penetration that we have for organized sector in India as compared to the penetration that we have in various other parts of the world. Now, auto being the third largest producer, when it comes to India, India is the third largest producer of auto. We consumed about 40 lakh cars in the last year. Now, in spite of being the third largest consumer of cars in the world, if we see the penetration of automobile is just 4% in India. What is the penetration of automobile in China? It is about 15%. What about USA? The auto penetration is about 81%. Now, as the disposable income of people are going to be increasing, they are going to be spending more. As they spend more on the discretionary item, the consumption of all these products will increase. the penetration will increase, so it is going to be benefiting these companies in the mid to long term basis. Now, can anyone tell me, if I take the entire world GDP, how much does India contributes in that? Any guess?
2%.
Little more than that? It's between 3 and 5. So it's a tie. So if you see, India contributes about 3.4% to the world GDP. Now, after crossing UK, it has become the 5th largest contributor of world GDP in the world, right? So if you see today, India's GDP is about $3.4 trillion. So it took about 60 years for us to reach the first trillion. The next trillion came in 8 years, and we crossed the third trillion in the 5 years. So has the journey been so easy and so smooth for us? The answer is not. But if you look at the current situation is much different from the situation that India was a couple of decades back. Now, let me tell you an example from my life. So the last weekend, me and my wife stumbled upon our parents' childhood pics. So while we were going our parents' childhood pics, both me and my wife found it difficult to identify our parents among so many relatives, because our parents looked much different in those pics as compared to what they are looking today. So my mother used to have longer hair in her youngerhood days, as compared to what she is having today. Similarly, when you see a country, the country also looks different after 5 years, 10 years down the line. But then when you see a country every day, you do not realize the difference. Now, why am I saying that? If you look at this chart, can anyone make a guess what is this chart about? Any idea? Monthly income of a person? Let us be more macro. Any other guess? Let us be more macroeconomic.
Hello.
Could not hear. Someone said in the back. Pardon me? It's not Nifty 50? So if you look at this chart, this is the chart of our nominal GDP, what you and I have contributed over the last 30 years. So if you look in 1991, our economic strength was not that great. We had to put our goal to IMF to take loan. But in 1992, when the economy opened up, one thing that we have seen, irrespective of whatever has happened, be it 2000 technology bubble, be it 2008, the global financial European crisis, the crisis that we have seen, be it 2013 European crisis, except for the blip that we saw in 2021 because of COVID crisis, which is 1 in a 100-year event, our economy, our GDP has grown non-stop. So whatever we say, whatever we believe, the governments have come, performing governments, non-performing governments, scam, irrespective of all that, you, me, our entrepreneurs, we haven't stopped. And why we have been able to do this kind of growth story is that we as Indians are blessed with our own internal resources. We have got entrepreneurs who have always been ready to bring out something new for India, because of which we have been able to reach today where we are. Just to give an example, from practically not having any technology sector a couple of decades back, today, thanks to certain people, and those people are from Bangalore, if you see technology, India is one of the largest hub for technology, right? So if you look at the technology sector, it contributes about 8% to our Indian GDP. Think of the number of employees, think of the employment which is being generated because of this sector, not just in India, but then from outside India as well, because of which $100 billion of inflow is happening into India from outside India. So it has been a phenomenal run. Now why am I saying that? I'm saying that because in the next 20 years we are going to grow, and this growth is not just going to be coming from your services industry, it is going to be coming from various other sectors as well. Say your manufacturing, say your other sectors. Why am I saying that? Because if you look at our country, it took us about 75 years to have the building blocks of India, and if we see today, in spite of not being that rich country as compared to certain other parts of the world, we are the third largest consumers of cars in the world. We are the second largest producer of cement in the world. We are the second largest producer of steel in the world. 1 in 8 medicines that is being sold globally is from India. We are the world's largest outsourcer of technology in the world. So, the growth that we have seen in the last 75 years, we have built the building blocks slowly and steadily. And the next 20 years, this building blocks is going to be providing us a very good benefit. Now, what will happen when your GDP or the economy grows? Your market cap also grows. Just give an example. If you see in 2007, the total market cap of all the companies that was listed on exchange was about 30 lakh crore. Now, today, can you name, what is the top 3 companies by market cap in India? Any guess? Someone said Reliance. What are the top 3 companies by market cap today? Any guess? No? Pardon me? TCS, fantastic. TCS. What are the other 2 companies by market cap which is having the largest market cap in India today? One is TCS. Any guess on the other 2? Reliance. So TCS, Reliance. Any guess on the third company? HDFC? Fantastic. So the top 3 companies by market cap today are basically your Reliance, your TCS and HDFC Bank. Now if I take if I sum the total market cap of these 3 companies, today it is about more than 37 lakh crores. So what was the market cap of all the companies in 2008? It was somewhere around 30 lakh crore, and today just these 3 companies are having a market cap more than what was the market cap of India in 2008. So that has been the growth story of India. Has it been easy? Though it was not easy. In spite of all, you can see in this entire journey, we have had so many problems in between, but in spite of that, we Indians have shown a sign of resiliency, because of which we have been able to reach today where we are. So we have seen that, the business cycle of India is going through a tremendous transformation. After so many years of pain, it has again shown a positive sign of revival. As it revives further, it is going to be benefiting our economy in the mid to long term basis. So we have seen the business cycle is improving, which is going to be benefiting our market in the mid to long term basis. Now the third dimension of our VCTS framework is the letter T, which stands for triggers. Now what are triggers? These are basically those factors which can cause a volatility in Indian market as well as global markets as well. So we at ICICI are currently focusing upon certain factors which we feel can cause a bit of volatility in market. So what are these factors? Let us look at them one after the other. So first factor is basically the inflation that is hovering in various parts of the world. So what happened, because of COVID crisis, in order to revive the economy, the central banks all across the world were providing a lot of stimulus. As a result of that stimulus, we saw inflation increasing in various parts of the world. If we see in last year, the US inflation was about 40 years high. Now, in order to control this inflation, what was US Fed doing? The US Fed kept on increasing its Fed rate in order to control inflation. So if you see the last calendar year, the US had increased its Fed rate by about 4.25%, which was the second largest after 1968. So as a result, what is happening, if inflation further increases in US might have to increase its Fed rate, and if it increases its Fed rate at a much faster quantum, then that can create a bit of volatility in our Indian market, because money from emerging nations such as India might flow towards developed nations such as US. So that is one factor that we are closely monitoring at this point of time. The point of comfort today is that this inflation, which was more than 9% in US, has been coming down and is somewhere around 6.5%. So the inflation has been slowly and steadily coming down in the US market as well. Now the second dimension or the second factor that we are closely monitoring at this point of time is the geopolitical tension between Ukraine and Russia. As a result of volatility, correction has happened in various parts of the world, and today if you look at various countries such as your Brazil, your Taiwan, your Japan, these countries are relatively attractively trading at this point of time. The third trigger that we are also closely monitoring at this point of time is basically the inflation in India. So if you see what has happened again in India as well, in order to revive the economy, the government was providing a lot of stimulus. As a result of providing a lot of stimulus and support, inflation increased in India. We have seen inflation coming down in the last couple of months, but then this inflation again made a U-turn and is now again about 6.52%. So if inflation increases further in India as well, it can again create a bit of volatility in Indian markets as well. So that is also a trigger that we are closely monitoring at this point of time. Now, while we have been hearing a lot about that, there are fear of recession globally, what will happen to Indian market, this is a very interesting chart that I've tried to convey that, shows how we are positioned at this point of time. So basically, whenever we go to doctor, what does a doctor do? He evaluates our various parameters, right? Why does he do that? In order to get an idea, how strong we are, whether we would be able to fight against any diseases that can attack us, right? Similarly, what I have done here is that I have compared the economic strength of India today as compared to what was the economic strength of India in the last couple of financial as well as global crises. So you can see that the economic strength of India today is much, much better as compared to what it was in the last couple of crises. For an example, if we see CPI inflation, during the global financial crisis, it was about 7.9%. Today, it is about 6.5%. If you see corporate debt to GDP, so if I take that entire debt of corporates and divide by GDP, I get corporate debt to GDP. During the global financial crisis, the corporate debt to GDP was about 64%. Today, it has come down to 50.9%. So what that signifies? The corporate strength and the balance sheet of corporate in India today is relatively much better as compared to what it was in the last couple of crises. Similarly, if you also look at the forex reserves, our forex reserves during global financial crisis was about $309 billion. Today, it is about $564 billion. So what is that signifying? That is signifying that we are in a much better position today, and even if there is any volatility that can happen because of global market, we are relatively much more stronger today to deal with any volatility that can happen and glide through the difficulties in a much better manner. Yeah, please. You can ask me a question. Yeah. Yes. Yes.
Foreign exchange reserve is much lower today.
So forex reserves, while it is lower, we have been increasing. If you see, from $309 billion, we have gone up to about $564 billion. Our forex reserves had gone up more than $600 billion. If you see the previous financial crisis, the kind of forex reserves that we had was able to cover the import for about 3 months. Today, the forex reserve that we have is able to cover the import of about 9 months. So from that perspective, we are relatively much better protected as compared to what it was in the last couple of financial crises. So having said that, to finally conclude, so as I said that, we have seen that the valuations, while it is coming down, but then it's not that cheap. The business cycle that we have seen after so many years of pain is again on a positive trajectory. Right? So as the business cycle further improves, it is going to be benefiting our market in the mid to long term basis. But as we discussed that, there are certain triggers that can cause a bit of volatility in Indian market in the next couple of months. That is why, if you look at today, we are basically recommending asset allocation. Now the positive thing here to take out is that, as the business cycle is going to be improving, it is going to be benefiting our market in the mid to long term basis. So any volatility that can happen in the short term basis because of this trigger should be taken as an opportunity to invest because the long term looks promising. But looking at the current market scenario, we are basically recommending asset allocation. Why? Because we have seen different asset classes performing differently at different point of time. There are times when equity perform well, there are times when debt perform well, there are times when various other asset classes perform well. So when you invest in this kind of schemes, where these schemes particularly follow asset allocation, these schemes are going to be investing into those asset classes which are relatively more attractive. So it will help you navigate the market in a much better manner. But then if you look at the kind of resiliency that we are having today is relatively much better as compared to what is happening in the global market. That is why we are more positive towards sectors which are more related to domestic consumption. Now, before I conclude, I would just like to quote from Victor Hugo. So he says, no one can stop an idea whose time has come, right? So basically, if you look at in 2008, what was the GDP size of India at that point of time? In 2008, our GDP was about 30 lakh crores. What is the GDP of India today? It is about 270 lakh crores and is expected to cross 300 lakh crores by about March, right? So if you see in the last couple of years, we have been able to add 40 lakh crores to our GDP every year. So what was the size of India in 2008? We have been able to add in India equivalent to 2008 to India every year today. So that is the kind of, that is, and you and me can basically benefit from this compounding story that is going to be happening by participating in this growth story. So this was something that I wanted to convey. Thank you so much for your patient hearing. Now, I would also ask Makesh to please come, and he would also be participating and would be talking about his growth story as well. Thank you so much for your patient hearing.
Hello.
Thank you, Gaurav.
Thank you so much.
One second. Can I ask Rangadhar sir to be on stage to honor our speaker for the day? 1 second, sir. Can you just be on stage once? Just honor him.
Thank you so much. And Gaurav. Thank you. Thank you.
Please, thank you, sir. Thank you very much. Thank you very much, sir. Any questions? Anything that you want to ask? Yeah. Yeah.
Check.
Gaurav, you mentioned about mid-term and long-term.
Yeah?
According to you, can you just define mid-term and long-term with respect to the stability of the economy?
So
One-
anything more than...
Just two questions. This is the first question.
Yeah?
Second, you mentioned that India has been stable or doing better. Is it compared with other countries in the similar situations?
Yeah. So the first question, anything more than 3 years is going to be considered as midterm, and anything more than 5 years is going to be considered as long-term basis. So that is, your definition that we have for midterm and long-term basis. Now, on the second question, yes, thanks to the initiatives being taken by the government, thanks to the initiative taken by our central bank, today India is in a much more resilient situation as compared to what is happening globally. Just to give an example, if you see the capacity utilization that India has got is relatively lesser as compared to US. US is more of a matured market today, but then when it comes to India, we have seen that we have gone through so many years of pain, and after these years of pain, there are various indicators which are indicating that we are at the initial stage of recovery as compared to US, which is more of a matured kind of market. So as this recovery further happens in the Indian market in the mid to long term basis, it is going to be benefiting our market as compared to what it is going to be happening in the other parts of the world. So while our business cycle is improving, we also saw that there are certain indicators which is going to be strengthening our economy. Our demographic picture is evolving, right? As Makesh said in the beginning, our median age is today it is about 28 years. We are one of the youngest countries as compared to other parts of the world. If we see in China, what has happened in China, now what we basically are trying to say, we are going to be seeing in the next 20 years what has happened in China from 1995 to 2015. So China, from not being known as one of the world exporter, today is known as one of the world exporter of the world. After it opened up its economy for world trade. So if we see today, China contributes about 40% to the total global manufacturing that has happened. So it took about 75 years to create building blocks today, and after that, we can see that these blocks are intact and it's going to be benefiting our economy and the growth the next 20-25 years. So from that angle, we are in a relatively much better position today as compared to various other parts of the world. Thank you so much.
Is there any other comparison other than US and China?
US and China is one example, and if you see the consumption pattern, India today is...
because the comparison is little, like you mentioned, US is a matured economy.
Mature country, right? Apart from that, if you also see what is happening is that, if you see the working age population, India today, if you see, boasts about, now if you see, this is the working age population ratio. where we have compared, India as well as world ex India, right? So if you see, what is happening is that now when you see India, India contributes about 18% to the entire world population. Our working age population is increasing. As working age population is going to be increasing, it is going to be contributing more to our entire Indian GDP. Today, India stands about 5th position in the world GDP contributor. Because of the various things that is going to be happening, it is going to be contributing more to our world GDP. Secondly, if you also see the penetration that we have in India to various sectors are much, much lesser as compared to the penetration that we have in various other parts of the world. As I mentioned, in spite of not being that a rich country, India is the third largest consumer of cars in the world. We sold about 40 lakh cars previous year. In spite of that, if you see the penetration of automobiles in India is just about 4%. As compared to that, if you see China, it is about 15%, USA is about 81%. So, as the disposable income is going to be increasing, the penetration will further increase, and there is a lot of room for further penetration to happen in various sectors, which is going to be benefiting India as compared to various other parts of the world. So that that is why we basically feel India is in a very good position.
Thank you.
Thank you.
Any other questions?
Yeah.
Question on this internet users.
Yeah.
Looking at that India populations, and do you say that we are far below than USA? We are 58 and 95% in USA.
Yes.
Where do we get this data from?
Okay, so we basically got this data from Morgan Stanley as well as OECD report, where we have taken out this information. Now, what has happened if you see when it comes to the mobile penetration, if you see the consumption of data per capita in India is pretty much lesser in India as compared to various other parts of the world. Secondly, if you also see what has also happened, if you see the kind of revenue, or we basically call as average revenue per user, which typically your telecom companies are making, if you see the telecom tariff in India is much lesser as compared to various other parts of the world. Now, what has happened in the entire telecom sector is because of the consolidation, because of the government initiatives that has been taken. The telecom sector has gone through a lot of pain in the last couple of years. From more than 10 players about 14 years back, we today have about 4 players. So a lot of consolidation has happened, and because of the consolidation, we have about a couple of dominant players left in this industry at this point of time. So since the consolidation has happened, since the number of players are lesser, their pricing capabilities have increased. So what will happen as the pricing capability increase? We have seen in the recent couple of months that they are planning to increase the telecom tariff in India in the next couple of months. So as the telecom tariff further increases, their revenues will increase, their profit will increase, so this sector will also perform well.
No, understand. My question is that the number of internet users, which is you are indicated 58%, whereas
Yes.
USA is 95%. But the population is we are.
So,
If you look at the population of India with compared to US,
Yes.
I feel that the internet user also would be proportionately high.
So internet penetration, if you see rural India, if you see the penetration is much lesser as compared to the kind of penetration that we have in various other parts of the world. The rural penetration is expected to happen furthermore. That is why the Indian government has been taking a lot of initiatives, to connect the various rural part of the country to increase the internet user penetration in India. So there is further still a lot of scope left for the penetration to happen for connecting our rural India as well. And as it increases, the penetration will further increase. Thank you.
When we are comparing with China and US, and now we are saying it is the time for India. So definitely India is a big country and we will have more consumption. But India is also very open economy.
Yes.
And when US was growing, there was no one, right? So now we already have China and US. So when India will grow, consumption will grow, we are a young country. So will not foreign investors from US, China and other countries will try to share the big portion of benefit? Like instead we all Indians will get benefit of India's growth. Will it not be divided among many countries? Is it different?
So while the government also takes a lot of initiative that the foreign institutional players do not cause any kind of volatility, it has its own checks to do that. But then the benefit, what is happening is that to just give an example of that situation. Now, if you see, in 2008, FII sold about 5% of India. And what happened to our markets? Our market tanked by about 56%. Now what if I ask you if something similar of this sort happens again, as we say, right, history repeats, and if it does not repeat, it rhymes, right? So just make a guess, if something similar of this sort happens again in the recent past, and if FII sells about 5% of the portfolio, how much would have that impacted to our markets? Any guess? Right? So if you see, we saw an outflow of about 5% of FII. FII sold about 5% out of India. Thanks to the strong retail participation that we have had, our Indian markets tanked just by about 10% during this entire period. So why has it happened? Because the retail investor have invested today, they understand the benefit and the importance of equity market. They're participating in the growth story of India, which is protecting us against the volatility that we have seen in the past. So that would answer your question.
To add to that, ma'am, as Gaurav said and as I mentioned in the beginning, we have a very, very, very strong internal consumption story now, right? So we all know that. So our internal consumption itself is much stronger. Like whether it is in the form of cash flow or the capital flow or whatever it is, we are much stronger. And when US was going up, there was a Russia there. So now, yes, there are other countries. But the capital flow will help us to create wealth.
Right.
So that also is there. Thank you.
So, to further add on to that, if you see, interestingly, what is also happening, there is certain shift that is happening globally as well. Now, if you see what has happened in China in the last couple of years, in order to control pollution, China had been closing down, the factories. So the global companies who used to rely a lot upon China today have realized that, it's quite important to diversify the supply chains. So what is the Indian government doing about that? The Indian government is trying to attract these foreign players to come and do business in India. We have seen schemes such as Make in India, where it is providing incentives for foreign companies to come and do business in India. On similar lines, India is also promoting our local companies to manufacture more. So if you see, the Indian government has also recently, in the last couple of years, has launched production-linked incentive, where it is going to be providing a lot of incentive for Indian companies to open up manufacturing plants. So it is not just now, on both the cases, when further production happen, when a lot of incentives is being provided, or if foreign companies come and open business in India, it is again going to be benefiting our various sectors. Because this entire vicious cycle of creating more employment, more disposable income, again that getting injecting into economy is going to be playing out, which again on a long term is going to be benefiting our economy. Thank you so much.
Any other question? So if there is no further question, then we'll move on to the next session. Thank you very much, Gaurav. Thank you very much for this lovely presentation. Please, a big round of applause to Gaurav.
Thank you so much for patient hearing. Thank you.
So I'll not take too much time further. I'll take another 15-20 minutes more just to run our journey so far and what we intend to do going forward. One second, just the slides are getting ready. Yeah. So as we all know, we just completed 5 years in business. We started. Thank you very much. Thank you very much. Thank you very much. So I would like to compare this journey with that of the market. So this is the market growth over this period of last 5 years. When we started our business in 2018, market was somewhere at 10,000 levels. Now market is around 17,500 levels. So around 11% CAGR growth over a period of last 5 years. When we started with 3.5 crores. I'm sure many of you are partnered with me since then. Thanks a lot for that. And in next 1 year, we touched 10.5 crores. So I was just very happy when we touched 10.5 crores. I messaged my ex-boss, Vijay sir, you know him. So I messaged him that we touched 10 crore. He replied saying that, don't message me till I touch 100 crores. So Vipin, if you're listening, I'm on track. So then the next year, we touched 17.5 crores. And The next year, we touched 25 crores. And in 2022, we touched 35 crores. And this year, with a lot of happiness, I would like to announce that we have touched 50 crores of AUM. Thank you very much. Thank you very much. Without your help and support, it wouldn't have been possible. Without your help in getting new clients, it will not be possible. Thanks a lot for that. That's why we want to make this event a little grander, because I want to give, I want to say thank you to you all. So thanks a lot for that. Now, in this last 5 years of journey, we have got a lot of recognitions and stuff like that. So few things are worth mentioning here. So we've been featured in some of the articles like in Wealth Magic, I mean in the Week, etc. And this is one of very important milestone for us, because we got certified as a qualified personal finance professional. This certification has pivoted our business from a product-oriented business to a solution-oriented business. So when we started in 2018, we had only one product, which is mutual fund, which was my history. I worked in that industry, so I know only that. Then we started and we increased our product bouquet. So we started with mutual funds. Then we have a lot of products being started. The list has been given in the folder which is given to you. So we started with PMS, AAF, bonds, insurance, P2P lending, etc., etc., etc. Few of these are very close to our heart, because recently we got tied up with India INX to offer global stock trading to our clients. So our clients can trade in 33 different countries in 23 different currencies now through the platform. So it's already there in our website now. And we've partnered with HDFC Pension for offering NPS solutions to our clients. Then we have recently introduced AI-based stock trading options also. So we have partnered with an investment advisor in that. So many of these products, if you look at, are something which you need to know a little more. Say, for example, venture debt or structured debentures are things which we need to understand before we invest, right? So what we are planning going forward is that we want to conduct webinars on each of these products so that we can explain in and out of this product to our clients, and you can take an informed decision whether this is for you or not. So for example, when I informed my clients that we have AI-based investment advisory tie-up with somebody, one of our clients messaged me, I want to do that. But I called him and told that, sir, this is not the product for you. It is for another class of client. So you need to understand this in detail before you decide whether it is for you or not, right? So for that, we are going to conduct these webinars. So if you are interested in knowing more about any of the products which is given in that list which is given to you, you can please give us your preference on which products that you want. You can scan this and give us, if you want to take a picture, it's okay, or if you want to scan it now and give your preference on which product that you want to know more, what is the preferential time that you want to conduct this webinar, so that I can, whenever we organize that event, we can definitely get back to you. So I'll we're going online on this for 2 minutes? Yeah. So our online audience also, if you want to know more about any of the products that we have discussed, you can just scan this and give your feedback so that we can give you, we can inform you whenever we conduct this event. So now, so far, what we have done, right? So the way forward. So what are we going to do this year? So as it was told to the Spider-Man, with great, with high, with lot of power comes a lot of responsibilities, right? So with great business also comes a lot of responsibilities for us, right? So especially for the, towards the society. So what we are planning is, we want to inculcate financial literacy to at least 1,000 families in this year. That's one of our goals that we have taken up. Now, what is the importance of financial literacy in this society? So financial literacy helps us to get ourselves into our own situation where we can decide on what we want to do later, or how we can find capital or money for our life goals like retirement, etc. So it's one of the very important goals that, a topic which everybody should know, but unfortunately it is not told anywhere. So we are taking up this responsibility to educate about financial literacy to the public, and we are committing that we are going to touch at least 1,000 families this year. 1,000 families is not possible. We are not going to give solution to 1,000 families, but we want to inculcate financial literacy to 1,000 families this year. That's our commitment. So how we are going to do that? We are going to do investor awareness programs, wherein we will talk about basics about investments, and without any cost, we will be giving this kind of education to people. So what all we'll collect in investor awareness programs, we'll be talking about basics of investment savings, investment options available, importantly risk associated with each of them, importance of emergency fund, which nobody looks at it when we start our investments, importance of health and life insurance. Very, very importantly, the difference between insurance and investment, which many people still don't understand. They take some insurance products and say that our future is secured, but may not be the case. Then we'll talk about what is why equities, then basics of investments and mutual funds and SIPs. And if required, we'll talk about income tax and savings options for our clients also, if they want to do so. So we can customize these kind of topics depending upon the requirement of the crowd, so that it gives some impact on them, right? So that's what our intention is. And what I want is, I have a request to all of you. So you can also partner with us by introducing us to places where we can do this kind of education programs. It may be your own small groups, your own societies, your own companies, anywhere. We are willing to come and give this presentation so that people get impacted on that, right? So please get in touch with us if you want us to do that in any of your societies, any small groups, your companies, etc. Now, one important thing is, like, next month is March, right? So what is the importance of March? It's the beginning of financial year, and one more reason is there. It's International Women's Day falls in March, right? So financial literacy to women community is very, 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 very important according to us. So they are much better fund managers or money managers than men, according to me. So we want to inculcate financial literacy for women community. So please, if you have any of these gatherings on Women's Day or something like that in your society, in your company, please ask us. I mean, we will be happy to associate to give this kind of financial literacy to you. And we have already done a few investor awareness programs in some of the corporates earlier. One we have done with Manoj sir recently. So, sir, if you want to share some view how it went, you want. Yeah.
So Mukesh is my next door neighbor. So I have to say nice things only. But on a serious note, and this was the first time actually this kind of seminar was given to my team member, and they were like completely thrilled. And I have also noticed they has put a lot of effort to come out with that kind of a thought process to educate the customer. Typically what we do, sell, right? Here we have somebody very different. He's trying to educate the customer so that we can take informed decisions. So thank you, Mukesh, what you are doing.
Thank you.
We are pleased to have you.
Thank you. Thank you. Thank you very much for that, sir. So please help us in connecting with people for conducting this. If you have any contacts to be given to us, you can scan this QR code. People who are on online, also, if you want, you're online on this screen. Yeah. So if you want to scan and give us some contacts on where we can conduct this webinars, we'll be happy to take it up. So now, towards the end, will not take more than 5 more minutes, 5-10 minutes. We have few of our clients who is not able to come to Bangalore has sent us few messages. So we would like to play that. Sound is not there? Can you connect the sound, please? I'm sorry for that. So in the meantime, you can, as I told you, I would be obliged to you if you can send us some contacts where we can conduct these investor awareness programs, which is very, very, very close to our heart now, because that's one very important mission that we are going to take up this financial year, this calendar year. So I would be happy to do that. Are we on? Online also? Online also? Sound is there? No? Hi, sir. So, sir has also helped us doing a lot of IAPs in his organization. So, would you like to share some thought on how it went for the IAP that we have conducted in your organization? Because we are just getting ready with something. If you want to share something, sir, please.
Hey, thanks, Mr. Makesh. My name is Akhil. I work with an organization called ExxonMobil, and I've been associated with Mr. Makesh for about 6 years now. So I found this very valuable to be having financial awareness. And in my department, actually, I conducted a session by Mr. Makesh, which he graciously accepted. And I would say we all are generally financially aware, but we don't know what we don't know, and we realized that when we had the session. So it's consisting of very young organization. Generally, young people are very aware, more than what we usually are. But the feedback was that this was the first session in the whole 2-3 years of career they had, where they listened each and every word very carefully. And I would say many of them were able to make informed decisions. And I believe that it's very important, and they felt connected to the organization as well. To be very frank, I had my own interest to conduct that session. So a very good feedback. People are aware where to invest, when to invest, early to start. All those things, I think it went very well. And those people still remember that session. So I would say, once again, thanks to Mr. Makesh for conducting that session. Thank you.
Thank you, sir. Thank you very much for this. We are all good? Okay, so in the meantime, if you want to share something, we are just having some technical links there. So if you want to share something, it's open. You want to say something, sir? Yeah, oh, I'm sorry, I'm sorry. You can see.
I would like to have a few words to about Asia. It's okay, I'll just go there.
Good evening. Let me take this opportunity to congratulate Samish Financial Services on their 5th anniversary.
It's not in a good shape. I may not be able to speak much, but oh, thank you so much. Really, very kind of you. Yeah. So let me just say much. Let me say about myself. I was an IBM director in projects. In fact, I was the one who executed this mobile data 2003 to 2007, and I given multiple presentation to Dr. Manmohan Singh and Dayanidhi Maran. But what I wanted to say here is that let me just congratulate Mahesh for long. I have relationship with him. I'm purely a technical person. When it comes to financial aspect, my knowledge is quite zero. But I associated with him after my retirement. Believe me or not, the kind of, he's so punctual, first of all. Anything, no, if I call Mahesh, yes, he's there next to me. And then the kind of advice he gave me and the way in which he has brought up my, the investments, awesome. I would like to just say thank you to him, first of all. And more to say, every time whenever I look at that, he used to come and meet me on every month, whatever the investment which I made, and he used to show me on the papers that how it has grown up. It was to me more of a monkey looking at the coconut. It is only on the papers. So I just wanted to liquidate, and I asked him, sir, the next day, he made me to realize that, yes, crores of money which he had be able to liquidate in a day. Thanks, Mahesh, for whatever you have done so far for me. And the, the knowledge which as I told you, I am a 100% technical person. I am no more, my knowledge on financial aspect is zero. But the way in which he educated me, believe me or not, really salute him for the way I know to some extent where to invest and when to liquidate. Thank you so much, Mahesh. I just want to take this opportunity again, once again, and would like to continue my relationship with him. Thank you.
Thank you very much, sir. Thank you very much for your kind words. We're all good? Yeah. Thank you.
Good evening. Let me take this opportunity to congratulate Samish Financial Services on their 5th anniversary. I'm dealing with the Samish and team for the last 3 years, and I can say that this company is one among the proficient financial services companies in India. The most I like is the commitment and the dedication to work. Whenever you ask any financial services, they are at your service without any consideration. I'm sure you will reach in heights within a short span of time. Congratulations once again and all the very best. Thank you.
Hi. Let me take this opportunity to congratulate Samish Financial Services for the completion of 5 years excellent service in this industry and crossed 50 crore AUM within the short span. As my personal financial advisor, thank you Samish Financial Service team and the team with Mr. Mahesh for your top-notch professional guidance, on-time advices, and strategically designed investment portfolios help to maintain and build my financial goals hassle-free, especially as a person residing outside India. Thank you so much. Good luck to you, team.
Hi, my name is Hussain. I've invested with Samish Wealth for portfolio management and investing purpose. My account is being handled by Makesh. I'm supremely happy with his performance and with the team performance. Anytime I require any reports, Makesh is always available. Within half an hour, he'll get anything done. This confidence I like because I'm very choosy about the financial services and the kind of service I get. Previously, I have been dealing with banks and it has been a terrible situation which I was highly unsatisfied. So I started with Samish Wealth. Now I am totally satisfied with their job. I've been already dealing with them since 2014 and I hope to continue to deal with them because of the service levels provided and the satisfaction what is there. So you can be rest assured that your money placed here will get the maximum possible returns and that it is in safe hands.
Hi, I'm Dr. Bangopal Guru. I'm an ENT surgeon from Mumbai. I've been associated with Samish Financial Services for the last 5 years. Mr. Makesh has been really helpful in helping us grow our hard-earned earnings. Like he keeps saying that the next decade is the decade of India, so I hope he is able to grow our hard-earned money and his organization to a higher level. I wish him and his organization all the best.
So thank you very much. So that's from our side. Anybody want to talk? You can talk. Yeah, please come.
My name is Gopinathan. My association with Mukesh started sometime in 2017-18 when we were looking for some opportunities for some capital gain tax investments. And I went to ICICI Bank, being a customer of that bank, to seek some guidance from them. And by default, the persons on the counter directed me to Mukesh, and that is how I got in touch with him. But ever since then, he has been very, very helpful, very prompt, and all that I can say is that during the last 4 or 5 years that I have been associated with him, not only me, my entire family has become clients for Mukesh, and they are all looking forward to him for investment opportunities. One of the important things that we have observed in his service is he gives us advanced information about the opportunities for investments which can give us a better return. Especially for people like me who are retired from active service, it helps us a lot because that gives us an opportunity to choose an option, safe option, where we will be getting a return much better than what we can get in the normal investment portfolio. And another important thing that we have experienced is that Mukesh is very quick to respond to whatever messages we send to him. And not only that, and he gives us at-door service for whatever we require. That is what I have seen in him. Not that but this is my experience and our experience as a family. And I would like to congratulate him for whatever he has achieved. And it's a phenomenal achievement from whatever data we observed here. And I wish him all the very best in his future endeavors too. Thank you very much.
Thank you very much for your kind words, sir. Thank you very much. Anybody else want to talk? Please. Yeah.
My name is Ranganathan, retired, almost 80. Been investing for quite some time. But I got stuck sometime in 2020. Ashwin, Gaurav, ICICI. Thanks to you guys, I got stuck. But then he helped me. That is when you one of your branch managers suggested his name, and I got in touch with him. Thereafter, I've been simply troubling him, and he has been always helpful in all kind of thing, out of requirement or anything. He has been helping. And investment, nothing to say. All the best for Mahesh, but he will be always helpful to you in any region. So,
thanks a lot for this, sir. Please.
Hello, everyone. First of all, many congratulations, Mukesh. I am Shubham. I work as a product consultant for TCS. So my association with Mukesh, I think it's 2 years. So post-COVID, me and my wife, we were looking for a financial advisor. And while going through some reviews in Google, we found Samish Financial Services, reference of that. And then we immediately contacted him. So we put our, all the plans that we had, we put in front of him, and then he categorized it as short-term, medium-term, and long-term goals. So we were pretty impressed with that. And we invested, and then my entire family, my mother is a pensioner, she has invested through Mukesh. My niece, she just set out in the corporate world, she has also invested with Mukesh. One of the points that he mentioned in the slide today was about financial planning. I will give my example actually. I come from a middle class family. I am from a place called Cuttack in Odisha. My grandparents, they were very inclined towards the post office monthly income scheme. So 25 years ago, I think it was fetching a returns of around 12 to 13%. And they were satisfied with that. My father himself, he was more inclined towards the FDs. So we were taught from the very childhood that don't look towards mutual fund, don't look towards share market, these are gamble. So with that notion, when I set out in the corporate world, I didn't have much knowledge about mutual fund, much knowledge about share market. I remember an incident in 2008 when I was staying with my roommates in Murgesh Palya. At that time, I think Reliance Power was launching its IPO, and one of the person from Sher Khan, he had come to our apartment to enroll my roommates, and my roommates casually asked, would you be interested to open an account, Demat account with Sher Khan, so that we can trade in the shares as well as invest in the mutual funds? I remember going back to my room, shutting the door and going off to sleep. I didn't even pay any attention to what they were suggesting. But then they have invested from that age, and they have made a considerable amount of money now. So I started pretty late because there was no one to guide me at that time. But thanks to whatever initiative he is taking, maybe this financial literacy, not just looking at, the family members that you have mentioned, maybe for the students it is very important. So maybe from the college level, if you can start, if you can inculcate that habit of doing the financial planning, that will help the younger generation in a long way. With that, I again congratulate him for all the hard work that he has done, and I'm sure he and his team will make progress in leaps and bounds in the future. Thank you. Thank you, Makesh.
Thank you very much, sir. Thank you very much for this conference. Sir, we've taken up so seriously that we will be, apart from the families, we will be giving this investor awareness programs to these schools and colleges also. So we promise you that. Thank you. So with that, let's conclude this event for the day. We have dinner ready. So somebody want to talk? Okay. So please join us for the dinner. Thank you very much for coming. And thanks a lot for giving us time. Once again, thank you. Thank you very much.